Welcome everyone. Welcome Ory, welcome Nadayar, welcome Moses. We're going to get started right away. So I'm going to start the usual way. My name is Timmy. I am senior editor at TechCabal. And what that means is that I basically tell my direct reports what to write and how to write it. But I also lead publications for our newsletter TC Daily. Welcome to the very first edition of TechCabal Live. And just in case you don't know, TechCabal Live is we hold it as a monthly or a weekly sometimes event where we talk about the things that are happening in Africa's tech ecosystem. And this is the very first one for 2024, and it's going to be a special edition. We are going to be launching TechCabal. We're going to be launching TechCabal Live. We're going to be launching the State of Tech in Africa report, sorry. Nadayar, Moses, are you guys here yet? I see that your cameras are still off. Okay. All right. I see that. Okay. Welcome. I think Moses will join us shortly. But yeah, we're going to be launching our State of Tech in Africa Q4 2023 report, and it's a quarterly report by TechCabal Insights, which offers a bird's eye view of technology trends in Africa. It captures data around acquisitions, funding, startup expansion, and regulations on the continent. And for this edition, we spoke to a couple of stakeholders in the ecosystem to put data into proper perspective and effectively turn it into actionable insights that you can make use of. So what all that jargon means is that we spoke to people, we asked them, look, what happened from October to December 2023? What can we learn from it in the ecosystem? And how can we create something that actually works for players in the ecosystem like Nadayar, players like Ory, venture capitalists everywhere, investors, and even the people building products every day. And this report, this whole event, it was created by TechCabal, and TechCabal covers the business and human impact of technology in Africa. And we do this by publishing some high quality articles, which you should have read. If you've not read it, please go to techcabal.com. And reports, we do newsletters, and of course, events like this. We also publish the TC Daily newsletter, which is a comprehensive roundup of tech news across Africa. If you are not subscribed to it, the link will be posted in the chat room so that you can sign up right away. This specific event is organized by TechCabal Insight, which is our events, research, and data analytics arm. They're an Africa-focused digital economy consultancy that leverages big data to help startups, investors, operators, big tech companies, government, and other ecosystem players on and off the continent to answer specific questions and implement key interventions. So like I said, it's a super special edition of TC Live. We're talking about the state of tech in Africa in Q4, and I have some brilliant speakers with me here today. Starting off, of course, with Nadayar Enegesi. Nadayar is the co-founder and CEO of Eden Life, which provides everyday services for people like me that don't have time for it. And they're doing a really brilliant work in Nigeria and in Kenya. Welcome, Nadayar. Good morning. How are you doing?
Thanks, Timmy. I'm doing great. Thanks for having me. Really, also great reports, super detailed and very educating, even for me too. So thank you.
Yeah, thank you. Super happy. We're going to add that to our appraisal so that we can get A's and all that. Next, we have Ory Okolloh. Ory is a partner at Verod-Kepple Africa Ventures. It's a Pan-African focused venture capital firm that backs exceptional founders in and from Africa. Before Verod, Ory was the managing director of Omidyar Network and Luminate Group in Africa, both impact investing arms of the Omidyar. Welcome, Ory. How are you doing today?
I'm doing fine, thank you. And good to be here. I'm actually a very early reader in support of TechCabal from Sheyi and Bankole days. So good to see how this has evolved over time, and very happy to be here.
Thank you so much. It's really good to hear from really early leaders that are still supporting us and pushing us to even be better. And last but definitely not least, we have Moses Kemibaro. Moses is a multiple award-winning technology entrepreneur, blogger, and analyst. He rants and raves about all things digital in Kenya and Africa, in addition to being one of East Africa's leading digital marketing trainers, speakers, and panelists at industry events. And he also contributes to leading media. Hi, Moses. What's up? Is Moses here yet? Okay, I think Moses is going to join us a bit.
Sorry, I'm here.
He's on now.
I'm here. Thank you so much for having me. It's a pleasure to be here.
All right. Thank you very much. So I'm going to run through our agenda very quickly. So what are we doing here today? So first off, we have the introductory part, which is where I've been speaking for what seems like 1 hour. And next, we're going to have a report presentation where my colleague Mobolaji will talk about the State of Tech in Africa report so that we know what we're here to do today. We can see the report, we can see the insights that the team has spent months combing through. And then we're going to have a 30-minute discussion with Nadayar, with Ory, and Moses. And we have a couple of questions we've combined for them. But we also will give time, about 30 minutes, for a Q&A session with the audience. So if you have any questions about what we're going to talk about, if you want to ask Nadayar or Ory anything, please drop them in the Q&A box, not in the chat box, because things can get missing in the chat box. Drop them in the Q&A box, and at the end of the and when we get to the Q&A session, we will answer them one by one. And speaking about the chat box, my colleague Victoria will be in the chat room, and she's just going to be moderating things and making sure that everyone is talking to, being civil and engaging. Finally, it's time. I've been talking, like I said, I've been talking for a while. So it's time for us to introduce Mobolaji. Mobolaji is going to come to talk to us about SOTIA, and it's my absolute pleasure to welcome him. Hi, Mobolaji. Are you here yet?
Hi, Timmy. Yeah. Can you hear me?
Okay, sure. Yeah, I can hear you. Walk us through what SOTIA looks like.
Hi, good morning, everyone. I'm happy to be here to present findings from our report. This next slide. Yeah, so when we look at 2023 at a glance, there are figures that explain the entire year in just a single slide, where we talk about funding, $2.7 billion, a drop from last year. Acquisitions, about 30, which during the course of the presentation, I would highlight some of the major acquisitions we saw this year. And not very good news in terms of 14 startups that shut down operations last year, layoffs, over 1,000 tech workers or tech employees got laid off. As usual, fintechs received most amount of funding by sectors, and property or prop tech startups received the least. It's interesting that startups are beginning to turn to debt deals. We saw 45 debt deals last year. And mega deals are basically deals that are over $100 million in figures. We only saw 4 last year, which is a drop from 8 of 2022. So next slide, please. So yeah, before I go straight to talk about funding, 2023 was a difficult year for African startups. The macroeconomic conditions were pretty much harsh. And the chart by the right there highlights some of the worst performing African currencies of 2023. You can see Nigeria, I see Kenya, Zambia, Congo, Malawi, just a number of countries that their currency lost value over time last year. And then because of this reduction in value, there was a case of low purchasing power for most people across the continent. Startups had increased operating costs because they serve local markets, and some of the tools they need to pay for are going to be paid for in foreign currencies. So that was also something that was highlighted last year. And also, as I mentioned, over 1,500 tech workers were laid off, while 15 startups shut down operations after raising $260 million in funding. Next slide, please. And so, as I mentioned earlier, startups raised $2.7 billion in funding across 500 deals. It's a decrease compared to last year, but the average deal size remains stable because last year we had about $5.7 million as average deal amount rather, and this year we are down to $5.49 million. But as I mentioned, compared to 2022, there were only 4 mega deals recorded within the year. Next slide, please. And so debt deals are beginning to gain momentum in African tech, or they rose to prominence last year. They made up about 38% of total funding. We had the likes of MNT Alan and M-Corp raise huge debt deals mega deals, in fact, last year. So next slide. Yeah, on a country-by-country basis, only 4 countries raised above $100 million in funding. There's a group called the Big Four. It's talking about Nigeria, South Africa, Kenya, and Egypt. They raised 86% of total funding amounts just last year. And then compared to previous years, Nigeria used to get the most in funding, but Kenyan startups received the most funding this year, huge deals from the likes of Sun King and Copper. And then outside of the Big Four, startups in Francophone Africa and East Africa, in countries like Benin Republic, Tanzania, DRC, and Rwanda raised significant amounts this year. This past year, rather, I'm sorry, we're in 2024 already. Next slide, please. So despite the fact that funding dropped, fintechs received the most amount of funding, and it's interesting that energy startups got the second highest amount of funding, which is not, it may be linked to the fact that there's a rise in sustainable energy solutions, clean tech solutions to meet the net zero 2050 deadline, and just the fact that a lot of African countries are trying to increase their electrification and access to energy rates. Next slide, please. Yeah, and now we'll talk about acquisitions. So acquisitions last year closed at 30. It's a decline from last year. And just like funding, fintech acquisitions were the most common of acquisitions in 2023. One major acquisition, of, let me say the biggest acquisition ever in Africa's tech ecosystem, was Tunisian AI startup InstaDeep that was acquired by BioNTech for $682 million. Please, next slide, please. And here we see a breakdown of the mergers and acquisitions by sector. We see fintech obviously having the lead, energy startups, cloud and AI startups, health techs, which just goes to show that mergers and acquisitions are happening across multiple sectors as startups or investors seek to consolidate on their investments or founders seek viable exit options. So the next slide, please. And so here, this slide is interesting because one of the things we also observed last year was the fact that startups are beginning to rethink their business model and then add new product offerings to increase profitability, which is as a result of the fact that the macroeconomic conditions in the continent are not very favorable or friendly. And I think it's great that we have Nadayar on the call. He may be able to expand on Aiden's play and the new offering of the e-commerce marketplace. So we have the likes of Stairs, a media intelligence business that was B2C focused, that's transitioning into a B2B model. Trips used to be an online vehicle rental, but it's now going to be a marketplace to get more revenue. MoneyPoint, which is already a business and agency banking giant in Nigeria, is transitioning to a retail banking play to get more, to increase revenue and leverage its existing distribution base. So the next slide, please. And so beyond all of these activities like funding, layoffs, all of these regulatory activities were common last year. I think in the past where regulations were in the background or in the sidelines, they're beginning to gain prominence, and the lines between innovation and regulation are becoming intersected. So for instance, crypto regulations, which about 3 years ago was was something that everyone was talking about here. Crypto is the next big thing for Africa. It's going to help us in terms of financial inclusion. And the past 2 years saw a lot of governments across the continent pass regulations against crypto. But last year, interestingly, we saw Kenya, Nigeria, Namibia, and South Africa pass favorable regulations or reverse previous regulations on crypto, which is interesting because now we've seen the likes of Yellow Card and I think Coinbase signed a partnership. So we expect, based on these regulatory moves or shifts, we expect to see more crypto startups coming to the continent, and even existing crypto startups maybe build new products. So the next regulatory activity that we noticed also was data lending. So data lending came under tight scrutiny in places like Nigeria, Uganda, and Kenya. So for instance, Nigeria and Kenya specifically Google took down the number of startups or a number of applications that offer digital lending to customers because they didn't follow the Central Bank of Kenya's regulations. And also Nigeria authorized just 273 digital lenders to operate in the country and then protect consumer rights, because there's been a case of data privacy violation with some of these data lending startups or companies. And then also we saw Kenya drive a host of regulations and policy, like reversing the 30% ownership in foreign companies, launching a unified QR code for interoperability, and signing a finance bill that has a lot of ramifications for content creators, for digital products, which we touch a bit of that in the reports. So next slide, please. And so despite the fact that there was a drop in funding, we saw venture capital firms close huge funding rounds. There were some of them that closed their first funds, debut funds. We saw a host of follow-on rounds. And it's interesting that we saw specialized climate funds, which I want to believe will be disbursed to startups that are playing in the clean tech space. And it's important to note that there was less investment in VC firms in 2023 compared to 2022, but it's still higher than pre-pandemic levels. So that's all on VC investments. Please, next slide. And so I'd mentioned earlier that with African tech saw its share of shutdowns and layoffs, which is, I think it's typical of an ecosystem that is maturing. Some businesses will fold up, some of them will stand the test of time, some of them will pivot. So for shutdown, we saw about 15 startups that shut down across multiple sectors. And most of the total amount that had been raised prior to shutdown was $260 million. For layoffs, we saw about 1,500 workers laid off, 18 startups laid off workers, and the sectors affected range from fintech, logistics, media, digital identity, etc. Please, the next slide. And so because we wanted to understand the impact of layoffs, there are huge human impacts to layoffs and then shutdowns. We administered surveys and got responses or feedback from those who responded to the survey. And from those who were laid off, company downsizing and the economic downturn, which I mentioned already, were the main reasons for layoffs. And most of the workers that have been laid off have been faced with financial and psychological instability since they were laid off. Next slide, please. And so, yeah, we also spoke to founders, or we administered surveys to founders to get a sense of what they think about the coming year, and which is not unlikely to see that founders are still optimistic, despite the fact that the performance of last year of Africa's data economy or tech ecosystem last year was not exactly favorable. And if you look at the chart on the right-hand side, you see that only 29% of respondents say it was above expectation. Please, next slide. Yeah, and so we are down to future outlook. And for future outlook, there's a macroeconomic part of things, the regulatory part of things, and then the ecosystem part of things. So for the macroeconomic outlook, we foresee slow growth across the continent because the African Development Bank and the World Bank have pegged growth rates in sub-Saharan Africa at about 3.8 and 3.4% respectively. And so we expect that most governments across the continent would administer high interest rates to combat inflation, which will in turn lead to reduced consumer spending. And in terms of regulations, we expect to see more regulatory activities and synergy between regulators and stakeholders like founders, innovators, to ensure that regulation and innovation go hand in glove. And one example of that, just I wanted to mention in passing, is Kenya, for instance. So the Blockchain Association in Kenya is going to work with the parliament to draft a bill to regulate crypto or virtual assets. And then for ecosystem outlook, consolidation or exit options for founders and investors, and reduced valuation, of course. I think the past 2 years were some of the best of times in terms of startup valuations for tech and tech-enabled businesses. And final point on ecosystem outlook is the fact that investment has been deployed. We've seen the Timbuktu funds that was signed with UNDP and the rest of African governments. That was last week. And VC firms releasing funding or closing out funding rounds, which will be deployed to startups that create markets, innovation that can disrupt the market, so can create entire new market segments. So that's all from the end of those are the major findings from the reports. Thank you, everyone.
Thank you so much, Mobolaji, for that insightful presentation. So I'm going to start this way. We've heard about what some founders think. 29% of founders interviewed said, we performed above expectations last year. So I want to ask you guys, Nad, Ory, Moses, how do you guys think we performed, the Africa tech ecosystem, how do you think we performed in 2023? And I'll start off with Nad.
I don't know. Yeah, because I mean, like most of the information is private and is sitting within the companies, right? But one thing is for sure is you cannot downplay the resilience of African founders, because like even if, like we said, the last 2 years could have been the best of times. Even in those best of times, African startups are probably the least funded globally, or among the least funded globally. And so I have to really commend all the startup founders and employees last year, because just from word on the street, a lot of companies had to tighten their belts, reinvent themselves, adapt really, really quickly to the environment. So, and for us, we're facing like multiple threats, right? We're facing regulatory threats. We're also facing the macroeconomic headwinds.
Yeah.
We're also facing funding cuts across board. So I think like based on all of those indicators, I'd say that startups did really well last year. It could have been a much bigger bloodbath than we have seen in this report.
All right. Thanks, Nat. Ory, let's go
Yeah.
over to you. How do you think we performed?
It was a tough environment, I think, all across. Your report mentions, yes, there are a few investors who have gunpowder and raised significant funds, but even on the fundraising side, I think, as Nadayar said, Africa already gets the least amount of dollars coming in for investment. It was even tougher for folks who are trying to raise funds. And then for businesses and entrepreneurs, there's local macros, but we found ourselves on the receiving end of global macros, whether it's rising interest rates in the US, which means that capital is deployed elsewhere, whether it's inflation that affects the consumer, or businesses, which means there's less spend on things that are not must-haves. But I think there's also a bit of a reality check, right? In those good days, some of the funding that came either distorted valuations, or there was growth at all costs, or pushing. I keep arguing that we've cut and paste the Silicon Valley model for VC and for blitzscaling and all of that in markets that are very complex. So if I was to put a silver lining on it, is a bit of a reality check, and saying these are the markets that we're building in and for, and how do we almost prioritize profitability and growing revenue, and thinking about acquisitions and all sorts of other things that make more sense in this market. So tough, but I think lots of lessons to be learned. Your report highlighted quite a number of pivots that are happening, which are good. Consolidation, which we can speak about, which should be good. And I think, doing business in Africa is hard on a good day. And so kudos to everyone who kept the lights on, is still going, is quite tough. And I think out of that, going into 24 and beyond, this will really be the opportunity for stars to emerge, as far as the startups who survive the storms, as far as folks who shut down and come back with the next thing. Maybe my last point I'll say, I've been around for a long time. Everyone thinks that this is the first one. Actually the second. Those of us who are around in 11, 12, 13 boom days, mostly was impact money coming in, not boom days, but it was the first time we shifted from small 25K checks. We had to fly all over the continent to pitch a 25K grant. And that was the best you could get in terms of investor money into impact money. There was a crash in 2015, 16, and well, actually 14, 15. And out of that came Flutterwave and Andela and Paystack and so many other folks. So it's a cycle. If you've been around long enough, it is a cycle. Harsh sometimes, but also an opportunity for some course correction.
Thank you very much, Ory. Moses, let's go over to you. You have a bird's eye view because you talk about these things a lot. How do you think we performed in 2023?
Thank you so much for having me here and providing feedback. Ory, good to see you. It's been a long time. And yeah, first of all, delighted to hear that Kenya got the bulk of the money. That being our market, I think that was really interesting to see. I think 2023 for me, given what we saw across the space, is that was a year of resilience. If your business was fragile, if your business hadn't built fundamental basics into the model and the ability to actually function without funding, then you're basically found out. So, but also I think as I speak to other founders and those operating in the fintech spaces and so forth, I think what we're hearing is a more sort of pragmatic approach to business, a presumption that the entitlement that existed previously, that funding will always be available, is no longer there. And we're seeing people moving more towards business models, like you noted, the pivoting, the changing, where I think there's a stronger emphasis on more B2B, less B2C models. And more importantly, the idea that people are now thinking about how do you build sustainability into your startup? How do you start to think about the fundamentals that will actually make you a viable and unviable business? But ultimately, I think this is Africa, and I think being resilient is part of our culture. It's in our DNA, and I think it sets the foundation for more success going into 2024. And even though we lost a lot of really strong startups, including some of those in Kenya, I think what we're seeing now is that there's going to be, the inevitable cycles, the feasts and famines that come with this kind of space. And I think you're probably seeing a reflection of some of the things that the likes of the Silicon Valley have gone through, in the last sort of 50 plus years. There's always this peaks and drops, and it's inevitable. There's a culling of the weaker ones, the stronger ones thrive and survive. We start seeing consolidation. And then again, as is the nature of technology, we wait to see what this year will bring forward, and especially in the context of AI. What does that look like for Africa in terms of new innovations, new startups, and new possibilities? But I think all in all, it is definitely a very challenging year, but I think it is also possibly a rude awakening for those who thought that it was just going to be business as usual.
I like that you mentioned AI, because I do have it. I'm going to ask a question about if we think AI here is overflogged, like how we had Web3 in late 2021 and early 2022. But before we get to AI, I want to talk a little bit more about funding. Now, Ory, what do you think about the rise in debt funding in African tech? Are there any limitations, or do you think it's sector agnostic?
It's definitely sector agnostic. I think it's a great development. And I come to the challenges, though, in terms of how it's currently structured. Why I say it's great, we have historically in this part of the world, again, because funding has been quite limited, been funding too many things with equity funding that should be funded with debt, especially working capital and assets. And that has led to a lot of premature dilution for the founders, especially because they're raising equity for things, again, in other markets that could be debt funded. And so by the time you're getting to Series A, Series B, there's almost no skin in the game. So you're in this conundrum. Folks want to invest in your growth. They look at the dilution, it's not great. And it's also very limiting for the founders. So one, there's been a mismatch of instruments versus the needs of the business. So debt funding is great. Historically, the challenge has been that your natural sources of debt, banks and so on, would not even touch startups. And then you started to see folks like Lendable and a few other venture debt players coming to the market. And this enabled really the growth, especially on the lending side and on asset-heavy businesses. You saw Moves has raised a lot of debt. Trigger raised quite a bit of debt, M-Copper and so on, because it's asset-heavy businesses. But I think even for software, there are things, again, that we're financing with equity that really should be debt. The challenge now is that the debt that's coming in is USD debt. So you do not want to be servicing USD debt when you're at all our currencies, unless you're in CFA, falling. I've gone through multiple devaluations. So you're seeing startups caught in this conundrum at the moment that the debt that is available is foreign currency nominated, which was fine when things were stable, but it's very punishing in this particular point in time. Even cloud services, by the way, it could be a whole other webinar, but how everyone is rethinking their AWS bills at the moment in USD.
There's a conversation on Twitter now about how much everyone has to pay for cloud servicing, and it's a bit
opportunity. Those of us who remember Angani version 1.0, we might have to come back to those startups offering local cloud, but that's a separate issue. I think what's missing and what's the opportunity is exploring local currency debt. If you see all our pension funds are sitting, I don't know what's going to happen in Kenya at the moment. I think 80% of their money is in government paper that's starting to look shaky. And we're like, here are startups, and you can validate their revenues. They're right here. The check sizes they need are not that significant. So there's a real challenge for us local players to think about local currency venture debt. Is the only way we grow our startups while protecting them. So for me, it's sector agnostic. I think it's an instrument that was long overdue in this market. And the next level of growth I'd love to see is us in industry really thinking about how we close the gap and develop instruments. And particularly, this is an area DFIs should be playing in rather than competing with us in VC.
Yeah.
Maybe we delete that, but they should be thinking about alternative instruments, and a few folks are doing it. FSD Kenya is exploring alternative models for venture debt in local currency. So I'll stop there. I think I've made my case, and the next level of thinking should be around local currency debt instruments for startups.
Okay. Thank you for that. Speaking of local currency, I want to ask about how that devaluation in general affected businesses, because you've spoken about debt already. But Nad, over to you. How much of an impact because across countries we had Zambia, we had Zimbabwe, we had Nigeria, and especially Ghana experienced these huge swatches of devaluation. How did it affect businesses? And is there anything we can do better to assuage that in 2024? Do we have to keep working with the times?
It's multi levels, right? So they're the obvious ones, like you have bills that are in foreign currency and you're earning revenues in local currency. So but where it gets very painful and annoying is budgeting, planning, and just like managing cash. Because like even now you could say, okay, yeah, I'm gonna model for the rest of the year at $1 to 1,400 naira, but we do not know where the floor is. Like we could get to November and it's 2.5, and you cannot really predict. So that unpredictability is very unsettling. And then there's ripple effects too, right? Like this stuff also affects things like inflation, and it also affects input costs. Like if you're depending on any services or local service providers that are importing goods as well, it also affects operations. So it's just bad, man. Like and there's no I think the worst part of it is that we do not know where the end is. There's no end in sight. So I really like what Ory was saying about figuring out how to get local capital, whether it's in form of debt, whether it's in form of equity, whether it's in form of like new instruments that are going to work for the times and the environment that we're in. We really need those options.
Thank you. Moses.
Yeah, I think Moses had his hand up. Yeah.
Yeah.
Yeah, I think mine was really this may be an earlier statement to tag on to what Ory was talking about, this dollar issue. You know, my day job is I run a digital agency, and we host, I think, hundreds of websites and things like this. So we have seen very significant correction around the cost of these services that we are endemic and inherent to what we do. To the extent that, you know, if you look at what we were paying out last year and today, it's about 45% more. Now, if you're in a startup scenario and you're using your AWSs and your Azures and all these things, and they're fundamentally key for your business, you start to sort of see, you know, even if you got funding, where is that money now going? How did you allocated or budgeted that money? And we're talking about some of these companies that maybe pre-seed or, you know, early stage, you know, that's a significant chunk of your operating cost. Now, going forward, and this is something that we're seeing on the ground in Kenya, which is quite exciting for me, is that historically we had this notion that it was impossible to run some of these infrastructures locally. You know, just this presumption that the quality of service will not be good enough. And we're seeing a mushrooming, actually, and almost a proliferation of high quality data centers in Nairobi. So case in point, we have a company like IX Africa today. They are $50 million deployment, funded through an international equity business. And more importantly, what they're basically saying to us is that, look, guys, we now have the ability to, you know, give you a local cloud provision that you may not have to go all the way out. And of course, they're going to do edge. We're talking about hyperscalers are also going to be coming to these facilities. So there'll be instances of Amazon and the likes locally. The Kenyan government apparently has now also signed up for Azure. I don't know how that's going to work with the issues of data sovereignty, but I presume that that means that the likes of, you know, IX Africa and other data centers will bring this locally. But ultimately, what I'm trying to say is that in these instances, hopefully, we'll be paying in local currencies, and presumably they'll not be dynamically increasing pegged to the dollar throughout the year. But these are real things when you think about technology startups. And I'm very optimistic that as you start to track, you know, new types of startups in this space, I think we're going to see an emergence of cloud vendors and providers, both local and international, operating within our markets.
Thank you. That's actually a really good point. I want to talk more about options for people. Like we've said, funding recession, we have to raise better. And one of the solutions people have come up with, or startups are looking at now, is key acquisitions and mergers. What does that? I mean, I would imagine that a merger and acquisition is not the ideal goal for some startups. Well, some startups do build for mergers and acquisition. But what does that mean for investors? What does it mean for investors and startups seeking exits because valuations have tumbled? Are we saying that in 2024 and going forward, exits through mergers and acquisitions will become more popular?
I guess I can go first.
Yes.
Yeah, wearing an investor hat. So I have 5 points to make on this. Maybe the first one is an exit is an exit. So the bird in the hand is what
It doesn't matter how it's coming. Exit is an exit.
Exit is an exit. It's not the way you liked it. It's not the way you thought about it. It's not the 10x. Maybe it's a down round. And it's a challenge because, even if it's not this the way we expected it to be, and remember, this was already a tough environment for exits with very few IPOs and so on. So if that's an option, it's good. One, as a founder, perhaps you get some time to take a breath and come back, start again. Two, for your earlier investors, it creates liquidity, which is the other challenge that we're seeing. I worry in a few years, people will say VC doesn't work in Africa because we have not had enough liquidity events. Remember, these are people who are putting in money expecting a return. Maybe what will change is that the return expectations shift, but you don't want to be in a place where as a market where you put your money in and you can't get it out. So I think people have been waiting for things to turn. They're definitely not going to turn in this year or even in the next 18 months. So I think if you have a decent acquisition opportunity at hand, maybe just taking it and is something I'd advise. An exit is an exit. And this, sometimes you find the entrepreneurs are there, but the early investors are not there. So this might be angels, pre-seeds, where we do all these headlines about Paystack and Flutterwave and unicorns and all sorts of things, and they thought that this is going to be the 10x, and it's not. And so I think also a reality check for early investors, or maybe less sophisticated investors, that these are cycles, and sometimes you just get your money back, even if it's not a return that you thought it would be. I think too, consolidation is needed. We were starting to head towards a lot of clone startups or adjacent. So in some cases, or expansion directly, which I think expanding through acquisition is smart, I think, rather than sort of doing building from scratch. So I'd also encourage, folks who, you're saying, oh, we're going to go to Uganda. Every deck had this magical expansion plan. And again, reality check either the costs or the macros or whatever, but acquisition is a smarter way to expand if you still have some gunpowder to buy companies. I think the other opportunity that this growing M&A or acquisition activity does is give us the ability to develop M&A chops in this market. So we only have bankers who can do M&As in Africa. And I think we need to deepen that. So whether it's the legal, whether it's understanding the tax implications, the structuring, that getting into that mindset of M&A, which is much more frequent in other markets, to include Silicon Valley. You only hear of the big exits, but many startups actually exit through acquisition. Is really, I think I'd love to see. I'm loving the increased volume. There's a new set of talent similar to what we're seeing in cloud that's developing this capability, especially on the legal side, to drive these transactions, local talent. And I think that's fantastic. So deepening our M&A muscle in this market is great. What I'd love to see, and this could be an opportunity for another startup, is transparency around M&A and around even secondary markets. I'm surprised we still don't have a good sense of who's ready to be bought, who's ready to exit on a secondary, who's looking to shop around for good deals, right? Because the investors who are happy to take you out in this market, and then maybe invest in the growth rounds. So I'd love to see more work, and maybe TechCabal can pick this up, or you guys who do research and insights, on building sort of an index of transparency around M&A and secondary opportunities, because I think that would really strengthen our ecosystem.
I think it's actually really interesting because you mentioned how the banking industry is really good at M&As. And Access Bank, we're hearing talks about them acquiring ARM pensions. And I'm saying it's interesting because 2 weeks ago, they acquired one company. And 3 months ago, they acquired another Zimbabwe company. 6 months, they acquired one in Angola. And they're doing a lot of these acquisitions across Africa. And it's really brilliant and solidifying their expansion goals. So before I go to the next question, to the audience, if you guys have any questions about what we're talking about the state of tech in Africa, about investing and funding, please drop it in the Q&A session, in the Q&A box. We'll be getting to Q&A in the, okay, wow, we actually just have 4 minutes till the Q&A session. So I'm going to go ahead and ask my next question very quickly, and then we'll go into Q&A. And this is for Nad, because at the very first, when we started the conversation, you spoke about regulation and how it's hitting a lot of startups really hard. So the intersection between regulation and innovation was evident last year. We had regulations in crypto, in the creator space, in the fintech space. What does this mean for the next set of builders? Are there fears of regulation lurking in the shadows?
It's interesting, right? So from the reports, the things that we mentioned about regulation in the report were all good things. Licenses, favorable regulations, those things are good.
Yeah.
So we can look at those as positive signals, and that's definitely going to encourage builders, right? But I think there is that fundamental lack of trust still, especially in Nigeria, right? Because we've had previous governments who just wake up and ban stuff.
Yeah. 2021.
So I mean, I think the signals are good, and we can't really shake off those fears that the government might not necessarily be on our side fully. But at least with Nigeria, what we can see now is a government that is very interested in working together with the tech ecosystem. I'm not sure about the other markets. Perhaps Ory or Moses can speak to those. But at least now we have a minister who we can say is one of us, and those conversations are going to be easier. And I believe that if Africa as a whole is going to dig itself out of the current climate, we definitely have to work together. And that means co-creating regulations, and also co-creating the innovations that will create the new markets that we want to see. I'll let the others speak to it.
Yeah, so wonderful person. Moses, what's happening in Kenya? Last year, there was an uprising about the new legislation. I think there was a finance regulation, and then there was creator regulation. So what does the regulatory space look like?
Well, it's getting interesting because if you ask any Kenyan right now, including Ory here, she will tell you that, it just feels like we're getting taxed for everything. Somebody the other day was even making a joke that it looks like weddings are soon going to be taxed as well. But the point is that the government obviously has spotted that the digital ecosystem is a great opportunity area to make more money. We've seen already in the last few years the digital tax, where all our services, including the Zooms and our Google Workspaces and all these things now have VAT included 16%. If you're working as a content creator, depending on whether you're Kenyan or a foreigner, there's a tax that is there. And we keep seeing more and more of these sort of cropping up. And what that basically means is that with the regulation, of course, the people operating in these spaces will continue to do what they need to do. But it just feels like there's a tightening and a very clear sense that this is an area where the government can extract significant revenue to cover their operating costs. And I don't think it's going to stop anytime soon. If anything, digital taxes and all have existed in other more developed markets globally, like, the US and Europe and so forth for a long time. So if anything, I think this was almost like, an eventual or inevitable outcome. But at the same time, I do feel that in Kenya, there is an element of conversation happening between the regulators and the policymakers and also the stakeholders in the industry. I remember initially when even the Finance Act was launched, there was some considerations in there that were actually modified to make it less punitive, where the entrepreneurs and also the influencers and content creators were concerned around the tech space. And I think also within the same context, the government is also trying to handle issues around things like data privacy, data sovereignty, where they're trying to bring a lot of this tech back home, so to speak. And I think some of these things might actually be strong incentives for investors to look at building things like the local infrastructures and some of the other service provisions within Kenya and this particular market. So I think if you look at it from a balanced perspective, there are some pros and some cons. But all in all, I think from a regulatory standpoint, probably the biggest caveat we've seen in Kenya is the fact that the taxes seem to be overlaying on everything, including the technology or the digital ecosystem in ways that possibly feel a bit excessive, but at the same time, there are some benefits to the same for those who are investing in this space.
Ory, so I'm going to throw that last comment to you. Are there benefits? Are these regulations giving investors benefits? Is it making it an open space? Is it making Africa more enticing?
Yeah, maybe not Kenya. I do think Rwanda is taking positive steps with the Kigali International Financial Center as a hub. And sort of we have to ask, and for investors, it's quite tough. Nigeria is a good example where when you start thinking about how to get your money out, it's very complicated as an investor, right? So having a hub, almost a second Mauritius, that makes it easier actually. And I think this is something now Minister Bosun talks about, where we shouldn't be in Delaware because that has all sorts of other exposure in terms of where you're registered. So making it easier for startups to be registered here and with the right regulatory framework. I think Rwanda is making some positive moves there. I think Kenya will soon find itself at the max of the Laffer curve and realize that we're a service. We're doing quite well in terms of building a very diversified economy that's not just reliant on commodities or agriculture, but technology and IT was a growing contributor to GDP. And so balancing the need for tax revenue versus how we grow the industry, I'm hoping is a conversation that we can have in the new year, because it's almost over tilted towards the regulatory side.
Thank you very much. So we are moving on to the Q&A session now. If you have any questions, please drop it in the Q&A box. And I'll start off with Rose here. Rose has a question. Rose says, this is a question for all the panelists to reflect on. What are the less, we saw a number of tech startups closed last year that seem well-funded. What are the lessons here on viability? And should we be concerned about the signal that this is sending about African startups? Thank you. Who wants to go? Moses?
Yeah, I actually wrote something about this, and my concern was that we had a lot of startups that were essentially doing carbon copies of some models coming from other markets without taking into consideration the local nuances of whether they would actually be viable or not. So if you're going to come and maybe do a solution that optimizes transportation and logistics, does it take into consideration that there were existing middlemen and an existing sub-economy that was well served by other incumbents in the space? So that basically, even if you bought a tech-first solution, it didn't necessarily take into consideration some of the local nuances for the same. Sometimes there's transparency issues around how things operate locally that might not play into some of these ideas. But in a nutshell, what I'm trying to say is that build something that is locally and contextually relevant, that is going to actually work and be sustainable. Because if we go the carbon copy route, then chances are it won't work. The second thing I think is in the way the business models were structured and developed, they might have made quite a few assumptions about certain outcomes, which ultimately compromise their sustainability or viability. So I think another thing, again, like I said earlier, the year of resilience, we started to see the cracks where businesses that might have appeared well-funded and viable at the core of it were not actually as solid as we thought. So again, I think that was a big wake-up call, just in terms of, the questions again, is your model viable? Is it, actually able to work in this market and region? And ultimately, is that going to be an investment that actually becomes sustainable?
Thank you. Before we move on to the next question, there's a poll that's going to come up on your screen. Please fill the poll. It's about what we're talking. It's relevant to what we're talking about now. And my colleague one sheet. Oh, it's up on the screen. So while we're answering the poll, I'm going to go to the next question.
So
And then we said,
maybe
okay.
Timmy, before you go to the next question, just to build on Moses' point, I mean,
Sure.
even if you had good models, B2C, what this tells me, as someone who's been around for a long time, B2C is so hard in this part of the world. These are consumers who will switch for 1 shilling when things are tough. Yeah, so there's nothing like loyalty, even with the best solution. So figuring out and it's hidden when you're in a growth at all costs, VC subsidized, expand, your customer acquisition costs are kind of hidden in there. Revenue, don't worry, just hit the numbers of customers, blah, 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 GMV, those things. Really mask how hard it is to do B2C in this market, either because there's a backup who's my guy, who always works better at the end of the day, or when I'm squeezed, I will switch and not think about it even for 2 minutes. So I think the only way to solve that is really to grow our GDPs and to have an actual consumer class. So only South Africa really has a consumer class in Africa. Egypt was getting close before the devaluations and the economic challenges. So there you get there with just growth, economic growth that builds an actual consumer class. So B2C is hard, very, very hard, even harder in macros. So I think even with the right model, if you want to go into B2C direct, it's incredibly difficult. I think that the other challenge was governance. And, no one asking the tough questions. Everyone sort of in a rara within the companies themselves. Many of them had boards. It's not that they didn't have boards, by the way. But both for startups and for investors ourselves, I'm saying we should ask, when you have a board seat, do you know what you're doing with that board seat? And should you be sort of doing the right things to protect the company in the long run? So I think we have governance gaps, and that's something we definitely, as an investor, are looking to work with our portfolio companies. I think the third is a called pain market fit. In other markets, you can survive product market fit, all these nice charts. If you're targeting bottom of the pyramid, informal retail, all of those things, you have to be it has to be a product. If you pull it out, folks will miss it. They'll look for you, they'll call you, they're like, why is this thing being suspended? So really figuring out pain market fit is important. Now, that being said, there is an opportunity there. And you see with companies like Move, where they built a software for an incredibly difficult market, Nigeria, and lending to Uber drivers and figuring out credit, traffic, how do you score them, all of these things. Guess what? That is, if you can crack that market, if you can build software that performs extremely well in that market, expanding it to other emerging markets is easier. So that way you also start to hedge and have non-local currency revenue. And then by the time you go to London, where they are now in the UK, it's so smooth because it doesn't get more chaotic than this market. So I think thinking about, if you're in the software space, thinking about building markets that can go from Africa to the world, rather than chasing a few slices here, TAM here and there, is something I'd love to see more of. And companies like Move are demonstrating that is possible. You start off in Nigeria, build a world-class software there, and take it to the world. I think is a huge, huge opportunity that we have, given the talents we have in this market. And I think this answers someone else's question in terms of what should they be building if they're building that.
Yeah, it does. I was going to say that. And so that answers two questions. There's a question here about fintech license passports, and it says, what are the thoughts on fintech license passports? What are the feasibility of what is the feasibility of this in the more harmonized regions, e.g. WAEMU, that's the West African Economic and Monetary Union, and EAC? Moses, Nad, Ory, does anyone want to take that? So it's a question that talks about the visibility of the feasibility of fintech license passports?
Yeah, I don't think I mean, it's an interesting idea, but I don't think I've seen any movement around, especially in financial services. Governments who want to regulate at a government level rather than regional. So I think it's an idea worth exploring, but I've not seen it put into action.
Okay, thank you very much. Next question, and this is one that I will throw to Nat. I would like to hear, Susan says, I would like to hear the speaker's take on implications of compliance and whether it could be a barrier to African startups and lead to more of them shutting down, aside from currency valuation. Could this cost of compliance be an obstacle, and how can it be mitigated? Nat, I mean, you guys expanded to Kenya very recently, so could you shed some light on this?
Yeah, like I'm not quite sure how to approach this one, right? Because the thing with compliance is mostly straightforward. The compliance requirements of each market are public, right? So lack of compliance is only a risk when it is more like ignored or when we procrastinate against doing it. So for anyone who is thinking about that, it's just like understand the market that you're operating in and the different compliance requirements that you need to meet. Where it gets really complicated is when you need things like licenses that have now become too expensive or unaffordable for the particular startup or the particular companies. But other than that, it's pretty straightforward.
Okay, I have a question here that says shutdowns and layoffs were a huge part of 2023. The latter took all the attention considering the huge amounts some of these startups raised and the corporate governance malfeasance that heralded their demise. What are the short, this is a very long question. What are the short and long-term implications of startups and shutdowns for the ecosystem? Do you think layoffs will be reduced or increased in 2024? I'm going to throw this to, I'm going to let Moses start because he writes about this a bit.
I'm kind of evaluating this question. I feel like I need to mull on it a little bit.
Okay, we can come back to it though. I think we still have a couple more questions to get through.
Okay.
Is it, I think, so the question is asking, yeah, whether layoffs will increase. I was trying to find it.
Yeah, so what are the implications of layoffs and shutdowns across the ecosystem, and will we see an increase in 2024?
Yeah, I think you'll see three phenomena. One, zone-based startups. So you're not dying, but you're not growing either, or you're struggling actually to. I'm very worried about too many seed companies, because on seed and pre-seed, the activity has sort of stayed, relatively decent.
Yeah.
As investors, we're also waiting it out, and no one wants. Very few folks want to lead actually in this current environment. So if you imagine, let's say in the last 3 years, we had about 500 pre-seed seed deals being done every year. There's a traffic jam loading, and so and at the same time, the metrics investors are looking at in terms of doing Series A rounds have gotten much more stringent. So one, there might be startups that are just stagnant, not dying, not growing. I think there will be layoffs another round. As folks focus on being capital efficient. So even if you've raised, or maybe you don't want to come back to the market just yet, extending your runway, which will mean layoffs. And then I think the third, in terms of implications on the ecosystem, I don't want us to be too hard on us. I mean, this everywhere is struggling, right? So there's always
yeah, it's not an African thing, yeah.
Africa, oh my God, look, I mean, you had, who's that guy? We work, that crypto guy,
SBL,
Bankman
Sam
Fried,
Bankman-Fried.
SVB,
Yeah.
you have scandals everywhere. You have governance challenges everywhere. Folks are laying off everywhere. It's a tough market everywhere. So I think we should just take this as an industry cycle. So I'd caution. Yes, there have been some big blow-ups, but I don't think this is an African problem. Maybe it's a maturity of where we are in the ecosystem. So, and if the cycle proves correct, there'll be a new generation of folks who learn from their mistakes. You're already seeing ex-CTO here, ex-CMO here, you've learned everything you needed to learn about logistics in Kobo, Lorry, Sandy, etc. And now you come back to the market because you know how to do it better. So I believe there will be a stronger cohort of founders that come up after this, and we'll be fine once the cycle sort of starts to go upwards again.
Okay. Moses, do you want to go next, or should I move on to the next question?
Yeah, I mean, maybe just to tag on to Ory, I mean, I pretty much exactly what she said. I think, with this wake-up call that we've seen, there is going to be more contraction happening in this space. I think even just this week, we heard that Microsoft in the entertainment division let 1,900 people go, a business that fundamentally, even through the merger, should be okay. But everyone is looking for efficiencies. They're being pragmatic. They're talking about the hangover of the COVID years where everyone overhired and, things are not the way they were 3 years ago. So I think, same thing. And I think going forward, everyone's going to have their eyes wide open, both the investor class and the entrepreneur class within these startups, so that, they're building for efficiency, they're building for sustainability, but more importantly, not looking at it being the sort of the years of free-flowing capital and very little accountability. I think, and again, not to forget also the issue that Ory mentioned about things like governance, which again were some of the drivers behind some of the startups closing. So, there you have it. I think this is going to be sort of a much more pragmatic here where when it comes to these startups.
Thank you. We will finally take the AI question, which was originally in the list. So taking bias into AI data sets and other concerns, do any of you see AI as a tool to bring about a more level playing field? And if so, how do we ensure Africa shows up in these data sets used for ML? Machine learning, that is. Nad, are you guys considering using AI anytime soon? What's that laugh?
I mean, AI is going to be powerful, right? And this question about whether the globally used AI tools are going to be inherently biased against Africans because we're just the minority and our data sets are not necessarily being incorporated into them. It's a really good question, right? As for how to solve it, it's tough because at the end of the day, like if you are a global superpower and you're at the forefront of building these things, what is your incentive to really incorporate these minority data sets aside from a sense of social justice, which we know that's not what the money follows. So the hard but bitter truth is we have to build our own stuff. Like if we want the kind of representation that we need, we have to build our own stuff. And I cannot see any way around that.
Okay.
Now the question is which you were about to mention that are you about to say that there are a couple of companies locally that are building AI solutions?
Yeah.
Please go for it. Yeah.
Oh no. You wanted to say so. Don't let me interrupt you.
Yeah, I was just going to say that I'm curious about the kinds of solutions that are being built locally already and how our government's also thinking about it. Because if AI becomes like the next frontier, we have to really start playing now. and it's not just a private effort. I think it's going to be a collective effort.
On the regulation side, I can speak a bit to that because I know we wrote about it this week. And my comment in the article I wrote was AI for Africa is going to be one of those things where the tech is always the regulation is always behind the tech. We're not considering it a lot at the moment. I mean, right now we're still trying to catch up to crypto. So right now what we're seeing is crypto regulations across the place and that's not far off considering that some countries outside Africa are also just enacting crypto regulations. I mean, I think the Britain did one last year. The UK did one last year. But for AI, Kenya is doing something very interesting. I think there's a policy that they are working on right now. Nigeria, however, companies are working, but regulation so far, we've not seen anything cogent as it is. Moses, Ory, do you have any thoughts on this question?
Yeah, so AI has become something of a personal project for me because, over the holidays, I can't tell you how many videos I watched or how many documents I read, but there seems to be a very consistent thread. Yeah, when you hear Bill Gates talk about it, when you hear Satya Nadella talk about it, when you hear Jensen Huang of NVIDIA talk about it, and of course, when you hear now Mark Zuckerberg recently talking about it, there seems to be a very common thread in terms of what their collective view is on AI. And all of them are consistently saying AI, at least generative AI that is of the ChatGPT variety, is going to be bigger than the internet. All right. Now, when you hear that, and I am a person who's worked his entire career as one of the very first people who was connecting the first internet users in the country to the internet, hears that, my ears perk up, my blood starts to boil, my excitement levels rise because I'm thinking opportunity. And I'm wondering, when somebody's saying that this is almost like a complete reset of the entire technology paradigm that we know to date, then, what are you going to do about it? Now, when it comes to platforms, I think the biggest impediment to deploying AI locally is what the technology actually costs. All right. If you're going to go and build an NVIDIA-powered supercomputer setup, the type that which the hyperscalers are currently doing, it might be very prohibitive because just the cost of the processors and the GPUs is going to be extremely expensive. And again, we're talking about this whole issue of inclusivity, right, and representation. The fact that we want our data sets, we want our point of view in our own localized platforms. When it comes to the large language models, we know that, the likes of Facebook, or rather Meta, have Llama 3, which is coming out soon, and they're trying to create an open source LLM that, can be deployed across different infrastructures and, different markets and so forth. And in fact, I was just reading this week that Mark Zuckerberg, I think they've ordered in excess of 350,000 GPUs, which again is going to put them on par with Microsoft's Azure when it comes to compute capability within their AI infrastructure. So what we're seeing is an arms race amongst the big tech players just to find that extra edge when it comes to building their own AI infrastructures. And what we're going to see in a very short period of time is I think the cost of accessing compute is going to drop massively. I think the open source LLMs are going to be as good as the proprietary ones, like the ones we have seen by the likes of the OpenAIs and so forth. But just like the early days of the internet, I think we're going to see another 2 to 5 years of what I call chaotic momentum and motion. There's going to be consolidation, there's going to be startups, there's going to be failures, and nobody really knows what it's going to look like on the other side. There's possibly a lot of overinvestment going into this space. But coming back to the Kenyan or the African story that I see happening is that we already have the ability to access many of these platforms and starting to build our own data sets, starting to use tools and platforms such as the Microsoft Azure, which is the platform that OpenAI is running on. There are opportunities already to start using your proprietary data within these platforms. And I believe Microsoft has been very bullish in communicating that you can bring your data to our setup and we will not in any way use it, or it'll be in a private siloed scenario and you can do stuff on it. So these opportunities exist, right? And until such time when we have our own proprietary LLMs, that means we go and do our own machine learning, we train our own models that speak to our own data sets and information, it's going to take a while for us to get there because, again, the investments required to deploy are very, very high. And as you know, when Africa comes into the global conversation, we tend to be a rounding error in terms of both revenue and also, level of interest. So while it seems important, in the bigger scheme of things, we are, again, a tiny portion of what the global situation looks like, but we need to get started because the competitive advantage that potentially will be yielded from AI and AI-related investments could be of the 10x variety when it comes to transformation.
Okay, Ory, you wanted to go?
Yeah, so I couldn't sort of was to thumbs up Nadayar's comments just around trying to make these guys more inclusive and say, oh, but they're being racist, or it's uphill. And and then maybe saying, oh, we're going to build our own proprietary models you've just had in terms of the costs and how far we are behind in terms of the race. What the opportunity is, though, is exactly what he said too. We can do our own data sets. We still have a lot of room from digitization data sets, figure out how to monetize those rather than try and say, hey guys, pay attention to us here. Because even if they did and they said, okay, give us what you have, what are we giving them? Honest question.
I think my friend Fatima Tambajang, who works at NVIDIA for Africa, will have a really good answer for what we can give them.
Yes, but let's start. I mean, literally, I was looking at a thing I posted on, because I was searching and I had to post on LinkedIn. Then I got a lot of good resources. So if you search Okolloh on LinkedIn, you can see. Then I saw, okay, there's deep learning in Daba, there's the Ghana Center. But if you're just to say, okay, who's doing the top research? African researchers on AI. That stuff should be on the top of our fingertips. Yeah, so there's a lot that we can do to say, even as you're saying, let us in. When they open the door and they say, okay, show us what you have, we're ready. That's number one. Two, I think there's opportunity around energy. These guys can't feed those machines. If I'm Kenya, man, I'm telling them, come here, we have green, we have hydro, we'll put your GPUs here, there's no risk, we have open land, all of that stuff. There's a whole opportunity around the infrastructure for AI because let me tell you, in the same way they're rushing around for GPUs, they're rushing around for real estate and for energy, and it's all going to come to a head. All of them have real estate departments now that do nothing else than look for sites for the GPUs. And I think that's a huge opportunity for Africa to host that infrastructure and also to do a better job of saying, when you come here, when you're ready to incorporate our data sets, we'll have them as you think about how to build. But it is so big. I mean, it's like, say, what's the internet for Africa? I think that's the wrong question. This is a fundamental tech development. And so we just need to figure out how to plug in rather than have existential questions around AI for Africa and what have you, because that ship has a train ship, whatever. It's left the station. There are huge opportunities, and I'm really happy to see research happening. And I think that the opportunity is hosting that infrastructure. As a region, we're very well positioned to be an energy source and a physical source for the AI infrastructure. So I think we should jump on that.
Okay. So we are out of time for Q&As, but there's one, and we have 3 more questions, but there's one very important question here that I'm going to ask. So it says, as a participant from Europe, Martin says, as a participant from Europe, I'm very interested in the African tech ecosystem as I feel the energy is flowing. The energy is flowing here. Hence, the movement is not as noticeable here compared to other tech markets. From your point of view, how can the European tech industry help to make Africa famous for tech besides financial investments? I'm going to throw this to actually Ory again. Ory and Nad, because
I've been talking too much now. So I think so. We have a base of investors from Japan and VCAV. And what's interesting in their approach as compared to investors from other markets, one is taking a long-term view, but two, they're actively looking for acquisition and strategic partnership opportunities. So I think providing paths to exit, looking for strategic partnerships is one way to make us famous. Liquidity will make us very famous. If you can come here and make money, we'll be extremely famous. So I think it's less of a PR thing or a hype building thing. It's delivering returns, making business easier to do when you come here, sharing technology, all of these things. Everyone is looking for new markets, Europe and Asia in particular. They've maxed out on growth opportunities. So it's figuring out how we make money together. I think that will make us the most famous.
Okay. Ory? Sorry, Nad.
Yeah, I was just saying that's perfect. Like if you help people make money, then they'll talk. Everything else is kind of like vanity, you know.
Okay. So Martin, you've heard us. Help us make money and we will make you famous. Thank you, everyone. We have come to the end of the TC Live for Sotia, and it's been a very insightful session. I still have a couple of questions, but I'm just going to email them after. And right before I go into my vote of thanks and start thanking everyone, I want to ask all the speakers for their final thoughts and their forecasts for 2024. So this time I'm going to put a timer on it and we're going to give everyone 1 minute because there's somebody in my DM that's threatening me right now. So let's start with Moses.
Yeah, I think for me, probably the big takeaways, first of all, is obviously 2023 had its ups and downs. I think a bit of a reset in terms of how the digital ecosystem is looking within the continent. But more importantly, when I look to 2024, the banner seems to say this is the year of AI. And more importantly, I think rather than the hype train that seems to be accompanying it, is looking at practical demonstrations of how AI can actually be used and is already indeed being used to create certain outcomes. And I'll give you a very, very simple example. I was at an event 2 days ago, a technology event. I met the CIO of a health services group that owns hospitals across Nairobi and the country. And he told me that they have an AI solution in place in this hospital where they had a tool where historically when they were doing an interpretation and a test using MRI to see, let's say you had a bone fracture and they would check this whole thing out, it would come to about 25,000 shillings. With AI, this has now dropped to 600 shillings. It also means that the doctor in question, when they're doing the interpretation, it gets actually better data points so that they may not just see the fracture, they might even notice that there are abnormal cells next to that particular tissue and might even find a secondary medical issue at the same time. So what we're seeing here is that when you think about AI in sort of practical, useful ways, it's going to actually reduce costs, but also improve outcomes and ultimately could give us an entirely new way of doing things from a technology standpoint. And you can overlay this into agriculture, you can overlay it into credit, you can overlay it into so many ways. But I tend to think that, the thing that I'm trying to see in 2024 and I'm excited about is how AI becomes not just the hype, but something that is part of our everyday lives and it's actually improving things on so many different levels.
Thank you so much, Moses. Nadayar.
For 2024, I think we're going to see more startups build towards sustainability. I want to say the worst of the character building is behind us. And now we're going to see more companies forge towards just being more sustainable. I think we're also going to see more innovation as well, because in addition to the difficulties the tech ecosystem has faced, our environment in general is facing serious challenges. And so the next wave of startups that are going to be coming out have to be solving fundamental problems that will make life better and easier for everybody. So I'm really stoked about that. I'm also stoked about the collaboration between government and private sector as well. I don't see us figuring it out without working with each other. So I'm also optimistic that that's going to happen. And this is me wishing that more of that is going to happen as well.
Thank you very much. Finally, Ory.
Yes, I think 2024 will be a great vintage for investors. When you look back 10 years from now, 7, 8 years. I think this will be a good time to invest. I think the entrepreneurs who have survived, who have pivoted, who have cut the costs and done other difficult things last year will be outstanding. I think there'll also be a new cohort, as alluded to earlier. Diamonds are formed under pressure. And if there was a year with pressure, it will be 24. And I think you'll see a new cohort of really great startups. And I think finally this growing trend, it's a big election year. I think the growing trend of people from tech startups, this ecosystem that we've been building, being in government, advising government, shaping government, hopefully even electing governments in the next few years, that this is a new generation of elites and influence that should come now, not from extractive commodities, but from intellectual and innovative spaces. So I look forward to seeing more of us going to the public space or influencing public spaces. I think that trend will continue in 2024.
Thank you so much. Thank you everyone for staying with us throughout this session. To the speakers, this has been a very insightful session. Thank you, Nat. Thank you, Ory. Thank you, Moses, for taking time out and spending your hour, talking with us about the state of tech in Africa. And to these attendees, thank you so much for joining. Thank you for joining us. This event was produced by TechCabal Insights, which is the insights, data, and events arm of TechCabal. Please fill our post-event survey to tell us how we've done. Just tell us what you think about the event, how we can improve next time. If you guys want to receive drinks, maybe we find a way to use AI to send drinks to everyone's houses next time. And download the State of Tech in Africa reports. The link is going to be in the chat box. My colleague Victoria should have dropped it. And subscribe to our newsletter. We have TC Daily, read by 130,000 Africans across the globe. And it's a breakdown of what you need to know every day in 5 minutes. So you can get smarter in 5 minutes by reading TC Daily every morning. And also subscribe to In a Jiffy. It gives you insights in tech. It's a weekly newsletter, gives you insights in tech in one single GIF or in a Jiffy. Thanks again for everyone. Thank you for joining me. It's been really wonderful. And right now I'm going to go and beg Victoria and Eniola, who said I am 2 minutes over time. Have a good day, guys.
It's a great session. Thank you for having us.
Bye.
Thank you. Bye.